When we talk about coming together to solve our problems as a country, this is one of the best ways that we can come together. These predatory loans and high interest rates impact rural communities. They impact urban communities like those that I represent. And it's funny because you would think that in a densely populated community like the Bronx or like Jackson Heights that you'd be able to have a bank on every corner. But what we actually see is that in poor and lower income urban communities, there are way fewer banks per capita. You know, there was a study that showed in Compton there was one bank for every 25,000 people back in 2006, and that was from Brookings. And so it shows that it's not just access to capital, but just the ability to go somewhere and cash a check. It can be very difficult whether you're in a very rural part of the country or even in certain urban neighborhoods. And, you know, we talk about payday lending, and in New York, we were really lucky in that we worked very hard to outlaw payday lending in the state. But what happens when everyday banks start to charge higher and higher interest rates? Essentially, your credit card becomes a payday loan. And this is not anything radical because we had these laws for a very long time in red states. We had them in blue states. We had them in half of the United States, had usury laws until 1978 when they were repealed. And ever since then, it's given a blank check for credit card companies and for big banks to charge extortion level interest rates to the poor. And the reason this is a moral issue is because we should not be using people's misfortune and using people's income status as a basis for extortion and as a basis for predatory lending. 15%, by the way, is a lot. 15% interest is a lot. So you can run a bank, you can continue to be profitable, but to charge 40% interest rates is no less than extortion. I heard from constituents in my own district, people have to take out loans connected to our horrible state of healthcare and our inhumane state of healthcare in the United States. That I was just hearing from a constituent who had to take out a $40,000 loan to pay for his mother's cancer treatments, and the bank gave him over a 20% interest rate so that he could pay for his mother's cancer treatment. So what happens? He was paying, this was back in 2006, he was paying them completely on time, $800 a month he was paying on this $40,000 loan to keep his mother alive. And when the financial crisis hit, he lost his job, he was struggling to make payments, and without telling him, they sold his loan off to a different debt servicer. They sued him in court. He got no notice for it. And then it wasn't until his wages were getting garnished that he found out that there was a settlement for him to pay $53,000 on a $40,000 loan, of which he had already paid $28,000.
To keep his mother alive.
To keep his mother alive. And that is legal, and it is common in the United States of America, but it is not normal, and it is not humane.
And I should add that this year, people in the United States will pay $122 billion in credit card interest, and that is a 50% increase in just 5 years. So what you have payday lenders over here, which is beyond belief. I mean, that is just disgraceful beyond imagination. But you got all these guys in their three-piece suits who are now the new loan shark hoodlums that we used to see in the movies. You know, we see in the movies the guys, oh, break your kneecap if you don't pay back. Well, yeah, well, I don't know that they break kneecaps.
But now they'll take your home.
No, that's right. Maybe do something even worse, or maybe pull the plug on your mom who needs medical treatment. So let's be clear about what we're talking about. We're talking about economic brutality. We're talking about some of the most powerful people in the world, people who make millions and millions of dollars a year in banks that make billions of dollars a year in profit. And they see a real profit center in going after desperate people who, because wages have been stagnant for 40 years, cannot afford the basic necessities of life. So today we're telling Wall Street and the payday lenders that enough is enough. Your grotesque and disgusting behavior is not acceptable in America, and we're going to change it. And this is an issue that impacts zillions of people all over this country. And I think a lot of people don't even know it. They go into a store and they buy a refrigerator. They don't know that they're paying 26% interest
And
rates.
you know, it just goes to show that all of these issues are connected, and it all comes back to our pocketbook. When we see these corporations like Sears, or like we saw with the bankruptcy with Toys R Us, is that these private equity groups are taking over these everyday retail companies, and they stop being companies that are retail and they start being essentially finance companies. So it's not a department store that sells you a credit card. It's a credit card company that lures you into a department store. And that's what's going on right now.
That's a funny way to look at it, but that's true. In other words, a very significant percentage of the profits of many of these department stores are not involved in selling you the product. They're getting significant interest rates when you charge to buy that product. And that is just quite amazing. All right, what else you got?
Well, so I think it's also important to connect the justice piece to this as well, because when we look at how all of these things stack up and add up, they concentrate in rural poor communities and urban communities and communities of color as well. When you look at mortgages, communities of color tend to pay much higher interest rates on their mortgages, and we see that, as James Baldwin said, it's expensive to be poor.
Stay on that point for a minute. Does everybody know what she meant by that? And that's a profound point. If you're wealthy, you have good credit, right? Earning a good income, you go to the bank, you can borrow money at a low rate. Go to a good grocery store in your community, buy food that is healthy and good, not too much. You want to buy a car, you buy it with low interest rates. If you're poor, what happens?
If you're poor, your interest rates are much higher. You live in a food desert, so your average head of lettuce or your average, bit of spinach is much more expensive than it is in other communities. And all in all, over and over again, you just think about, I remember when I was waitressing and I had a checking account. Now, with a lot of these corporate checking accounts, before I had pulled my money out and joined a nonprofit bank, what happens is that you need to keep a minimum of, say, $1,500 in your bank account for all 30 days of the month, so that you don't get charged $25 for them to have the privilege of holding your money. And so you're paying $25 a month just to keep your money in a bank account. And the average American so many Americans have less than $1,000 in savings. So we're talking about the majority of people that have incurred a $25 a month charge to just keep your money in a checking account. We're talking about even if you try to avoid that charge and you take your check to a check cashing place, which is very common here in my community. You take it to a check cashing place, they're charging you 10% just for
10%.
Sometimes 10%.
To cash a check.
To cash a check. It is expensive to be poor. And if you can't afford, a year ago, I didn't have health insurance. A year ago, I was paying for all of my medicine in cash.